Greed doesn't shout, it whispers. You ever had one of those days where everything just clicks? You're reading the market like a book. Price breaks resistance, you enter, you win, twice, 3 times, and then it hits you. Maybe this is the day I finally double my account. You raise your lot size, you ignore the warning signs, you feel invincible. But then, the setup fails, the loss is brutal, and suddenly, you're not a confident trader anymore. You're just a person staring at the screen, wondering where it all went wrong. Sound familiar? I'm not here to shame you. I'm here to tell you the truth. It wasn't the market. It wasn't your system. It was greed. But not the kind of greed you see in movies. Not the villains screaming, more money. No. The greed I'm talking about is quiet, polished, clever. It sounds like, just one more position. Let it ride a bit longer. You're on fire today. Don't stop now. It feels like adrenaline, but it's actually dopamine. Your brain rewarding you for chasing wins, not making smart decisions. See, most traders don't blow up because they're reckless. They blow up because they confuse momentum with mastery. They let the thrill of winning rewrite the rules they swore to follow. And by the time you realize it, you're already trapped in what I call the greed spiral. You win, you overtrade, you lose, you chase, you burn out. I know this because I've lived it. And I've watched trader after trader fall into the same psychological sinkhole, even the ones who had great strategies, especially them. So if you've ever moved your stop loss just to let it breathe, doubled down on a losing trade to make it back, or walked away from the desk with a pit in your stomach, then you're not just trading, you're trading against yourself. In this video, we're going deep. Not into charts, not into indicators, but into the mental machinery that decides your trades before you click buy. I'll show you why greed rewires your brain like a drug, the subtle signs you're slipping into emotional trading, and how to install a greed filter before it wipes out your progress. Because here's the truth, discipline doesn't protect you when you're calm. It saves you when you're euphoric. Let's talk about the dark side and how to beat it. Greed, the silent killer of traders. Let's be honest, most traders don't blow up their accounts because they don't understand charts. They blow up because they let greed sneak in, quietly. Greed isn't this loud, obvious monster. It doesn't scream at you to buy more or throw logic out the window. No, greed whispers. It wraps itself in logic, in confidence, even in what looks like positive momentum. You just had a great trade? Greed says, push it a little more. You're up 5% today? Greed says, why not make it 10? It starts small, just one more position, a slightly larger lot size, a skip stop loss, just this once. And before you realize it, you're not trading your system anymore. You're trading your ego, your chemistry, your need to feel right. I've been there. Back when I was starting out, I had a week where I was winning every single day. It felt incredible. I thought I finally cracked the code. So I increased my risk, started jumping into setups I normally wouldn't touch. I felt like I was in control. I wasn't. By Friday, I gave back everything I'd made, and then some. Not because the market changed, but because I did. Here's the truth most traders don't talk about. Greed doesn't show up when you're losing. It hits hardest after you win. That's when your guard is down. That's when dopamine is pumping through your system, convincing you you're untouchable. And that's exactly when discipline vanishes. So if you've ever looked at your trade and said, just a little more, even when your plan told you to exit, that's not strategy, that's greed, wearing a mask. And if you don't learn to recognize that voice, it will destroy your progress. Let's talk about how to fight it before it eats your account from the inside. The neuroscience of greed, why your brain betrays you. Let me tell you something most trading courses don't teach. You're not just trading the market, you're trading your own brain chemistry. That rush you feel after a winning trade, that sense of clarity, of invincibility, that's not your trading instinct kicking in. That's dopamine, the brain's reward drug. Every time you win, your brain floods with dopamine. It feels good, powerful. Your mind says, do that again. Not because it makes sense, but because your biology wants another hit. And here's where the real trap begins. Dopamine doesn't just reward you, it starts reprogramming you. It makes you crave repetition. It pushes you to take more risk, chase faster rewards, ignore rational rules. Let's break this down. Imagine you take a clean setup. Risk is in check. You win. Your brain lights up. Yes, we like this. So next trade, you're tempted to size up. No problem, right? But then you win again. Now your system takes a back seat. You start reacting to feelings, not data. Here's the scary part. This shift happens subconsciously. You don't even realize you've moved from calculated to compulsive until it's too late. I've watched it happen in prop firms, among smart, seasoned traders. It's not about education, it's about chemistry. Let me give you an analogy. Trading on dopamine is like trying to drive a race car with fireworks going off in your brain. It feels exciting, even thrilling. But you're more likely to crash because your attention isn't on the track anymore. It's on the feeling. And the market doesn't care how good you feel. It only rewards consistency. Now here's the kicker. Your brain doesn't distinguish between real opportunity and emotional impulse. Once you've tasted a series of wins, it creates a loop that makes you overtrade, overleverage, and override every risk rule you built when you were calm. It's not because you're reckless, it's because your brain is wired to chase highs, and trading delivers them fast. So what do? You build systems not just for price action, but for emotional action. Set a rule that you must step away from the screen after 3 consecutive wins. Use a trade journal that tracks emotions, not just entries and exits. Create a post-win ritual that grounds you before you touch the next setup. Most importantly, you train yourself to recognize the voice of dopamine. Because it doesn't say, let's be smart. It says, let's go bigger. And if you don't catch it, that voice will take everything. So next time you feel that urge, that irrational confidence after a good run, pause. Ask yourself, is this my system talking or my brain chasing a chemical reward? That one question might save you from weeks of damage. The greed spiral, how one good trade can destroy your month. Let's talk about something every trader has faced, but few admit out loud. One perfect trade, the one that made you feel like you finally cracked the code. You nailed the entry. The setup played out exactly as planned. You took profits, maybe even trailed your stop beautifully. You felt in control, smart, confident. But what happened next? You got back on the charts. Suddenly, every setup looked like an opportunity. You started clicking faster, risking more. You wanted that feeling again, that rush. And before the day was over, you were in the red. That's the greed spiral. And it doesn't start with a bad trade. It starts with a great one, when your brain flips the switch from discipline to dopamine. Let me break it down in stages. You might recognize yourself in here. Stage 1, the clean win. You followed your plan. You sized properly. The trade worked. You did everything right, and your brain rewards you. Nice work. Let's do that again. So far, nothing's wrong. In fact, this is exactly how trading should feel. Stage 2, emotional high. This is where things get dangerous. The win wasn't just profit, it was validation. You start thinking, I'm reading this market perfectly today. What if I scale up just a little? Let's make this a big day. You're no longer seeking setups, you're chasing more wins. Stage 3, the overtrade. Now you're clicking more often. Maybe you skip a confirmation. Maybe you widen the stop loss just to give it room to breathe. You've convinced yourself it's still your system, but it's not. You're now feeding the feeling, not following a plan. Stage 4, the hit. The market, of course, doesn't care about your winning streak. It throws a fake breakout. Your oversized position gets hit. You hesitate, you hold, hoping for a bounce. Loss, big loss. That's when panic kicks in. Stage 5, revenge and collapse. Now you're emotional. You want it back. Not the money, but the feeling. You enter another trade. Faster, less logic, more hope, and the spiral continues. Loss after loss, fueled by the need to recover. By the end of the day or week, you've undone everything. And worse, your confidence is shattered. I've been there. One of my worst trading months started with a 9R win on a textbook setup. Instead of logging the trade and walking away, I kept going. By the end of the week, I'd wiped out 60% of my monthly gains. Not because I didn't know what I was doing, but because I let one good trade ignite a mental chain reaction I couldn't control. Here's the brutal truth. The most dangerous moment in trading is right after a win. Because that's when greed disguises itself as momentum. It sounds like confidence, but it's urgency in disguise. So how do you stop the spiral before it starts? You create emotional checkpoints. moments where you pause and question. Here's what I do personally. After every win above 3R, I step away from the screen, 15 minutes minimum. I ask, would I take this next trade if I was still neutral? I journal my emotions, not just trades, emotions. I set a daily profit ceiling. If I hit it, I'm done, period. And most importantly, I remind myself, I'm not here to feel good. I'm here to trade well. If you're nodding right now, if this sounds like your story, good. That means you're self-aware. That means you're ready to stop trading on emotion and start trading with precision. Because in the end, the spiral only has power when you don't see it coming. Now you do. Real stories. The trader who won big and lost it all. Let me introduce you to Daniel, a trader I mentored briefly a few years ago. Daniel wasn't reckless. He wasn't naive. In fact, he was one of the most technically solid traders I'd ever met. He journaled religiously. He back-tested every strategy he touched. And when he stuck to his system, he was profitable, consistently. But none of that saved him. Why? Because his downfall had nothing to do with strategy and everything to do with psychology. It started with one trade, midweek. A clean breakout on GBPUSD, textbook pattern. He risked 1%, hit 4R in less than 2 hours, smooth execution. He messaged me, that felt good, the market's so clear today, might be my day. I didn't think much of it. Next trade, EUR JPY, a little early, but still within his playbook, another win, 2.5R. Then came the shift. He skipped lunch, eyes glued to the screen. He started scanning other pairs, looking for momentum, not setups. He bumped risk to 2%, then 3%. I called him. You up a solid 6% today. Why not call it? He laughed. I'm just in the zone. You know that feeling, right? Yeah, I know it. It's called euphoria, and it's the most dangerous emotion in trading. The blow up. Late that afternoon, Daniel entered a gold trade. No confirmation, no stop loss. He went full size, 5% risk. Why? Because the last few trades worked out, and in his words, this one just feels right. You know what happened next. The market whipped the other way, fast. He froze. No exit, no plan. By the time he closed the position manually, he was down 12%. The next day, he tried to make it back. Another 7% gone. By Friday, the trader who was up 6% on Wednesday was now down 18% and mentally wrecked. He didn't just lose capital, he lost confidence, and that, in trading, is far more expensive. The hidden lesson. Daniel didn't blow up because he was dumb. He blew up because he was human. He let one big win change who he was at the keyboard. He stopped being a trader and started chasing the feeling of being on fire. That feeling? It's dopamine. The more you feed it, the more it demands. And unlike strategy, dopamine doesn't care about risk management. It doesn't care about trends, zones, or R multiples. It just wants more risk, more action, more wins. What Daniel should have done and what you can do differently. After that 4R win, he should have walked, logged the trade, closed the laptop, let the high fade before re-entering the game. Here's the principle. The moment you feel invincible is the moment you need a circuit breaker. Not because you're weak, but because you're human and your brain is chemically hijacked. You need protocols for success, not just for failure. Most traders only set rules to protect themselves from loss. The elite ones, they build rules to protect themselves from winning too much, too fast. I told Daniel this later. What broke your trading wasn't the 12% drawdown. What broke you was thinking you were above your own system. He nodded, quietly, and then said something I'll never forget. I didn't lose to the market, I lost to myself. Your takeaway, you're not immune to this. Neither am I. Every trader, regardless of experience, is just one emotional trade away from disaster. But if you're watching this, you have something Daniel didn't in that moment. Awareness. And awareness gives you power. So the next time you crush a trade, before you open another chart, ask yourself, am I still the same trader who followed the plan? Or am I just chasing a feeling? Because that one question could save your account, your confidence, and your future. Tools to conquer greed before it controls you. Let's get one thing straight. You will never fully eliminate greed. You're not supposed to. You're human, not a robot. But what you can do is build a system so strong, so intentional, that greed shows up, but it never gets to drive. In this part, I'm going to give you real, practical tools to help you recognize greed before it takes control and take back the wheel when it does. These aren't just theories. These are the exact rules I use and that I teach my clients to stay grounded when the market tempts you to fly too close to the sun. Let's break it down. Step 1. Set a daily profit cap and actually respect it. You already have a daily stop loss, right? But do you have a daily profit cap? Most traders don't. And that's a huge mistake. Why? Because greed doesn't strike after losses. It strikes after wins. Set a rule. If I hit X% profit in a day, I'm done, no matter how good the next setup looks. For me, that number is 4%. Once I hit it, I log off. Not because I think the market's done moving, but because I know I'm no longer emotionally neutral, and I want my decisions made by logic, not by leftover dopamine. Data 2, the 3-win rule. Walk after 3. Let's say you hit 3 green trades back to back. Most people would say, keep going, you're in the zone. But I say the opposite. Take your win. Walk away. Let your brain reset. Back-to-back wins create a psychological distortion. You feel sharper, but you're actually more vulnerable to impulsive decisions. So make it simple. 3 wins, stop trading. Trust me, you'll thank yourself at the end of the month. 3, use a trade journal that tracks emotions, not just entries. Most journals look like this. Entry price, exit price, P&L, maybe a screenshot. That's fine, but it's missing the real battle. Start logging what matters. What did you feel before entering? Why did you size up or break your rules if you did? Were you excited, anxious, overconfident? When you start tracking emotion patterns, you'll start to see the early signs of greed. For example, I noticed I tend to oversize after a day off when I come back eager to trade. Just knowing that has saved me thousands. 4, the greed interruption. Ritual. You need a physical reset to break the emotional loop. For me, it's simple. After a big win, I close the charts and do 20 push-ups. Then I drink water. Then I review my journal before I even consider another trade. Why push-ups? Because they reset my nervous system. Why water? Because hydration reduces cortisol. Why journaling? Because it pulls me out of reaction mode. Find your own ritual, but make it automatic. Make it part of your trading DNA. 5, create a red flag checklist for greed. Before you click buy, ask yourself, am I trading bigger than usual? Did I just have a big win? Am I trying to feel something or follow something? Am I violating my plan even slightly? If you answer yes to any of these, pause. Greed may be running the show, and the goal isn't to suppress greed, it's to expose it before it becomes action. 6, use a trading buddy or accountability system. This one's underrated. When you're alone, it's easy to justify a greedy move, but when you have to explain it to someone else, it sounds a lot more irrational. Find someone you trust, even if it's a community online, and set this rule. I don't enter oversized trades unless I talk it through with my partner first. It creates a moment of reflection, and that can be enough to stop a disaster. The real goal, emotional consistency. Look, trading will always tempt you. There will always be another candle, another breakout, another perfect setup. But if you want to win long term, you have to build an emotional firewall, a system that keeps your psychology in check, not just your positions. Because at the end of the day, your greatest edge isn't your strategy. It's your ability to trade with clarity, even when your brain is screaming for more. Discipline is not a mood, it's a protocol. Build yours now, before greed gets its hands on the keyboard. From greedy to consistent, building the trader's mindset. Let me ask you something simple but serious. Do you want to feel like a winner today? Or do you want to become a consistent trader for the next 10 years? Because the mindset required for each is completely different. One is driven by emotion. The other is built on discipline. And if you're like most traders, you already know what you should do. But knowing isn't the problem, is it? Doing it consistently, that's where the real battle is. So how do we move from being a trader who chases the market to becoming someone who shows up calm, focused, and in control day after day? Here's the truth. Trading consistency doesn't start on the charts. It starts in your mind. Let's unpack how to build that mindset. 1. Reframe what success means in trading. Most traders define success as winning trades. That's flawed and dangerous. Because winning is not a skill. Winning can come from luck, market noise, even mistakes. The real definition of success should be this. Did I follow my system flawlessly regardless of the result? If you followed your rules and lost, that's still a win because you built trust with yourself, and that trust compounds emotionally and financially. Reframe this now. A profitable day where you broke rules is a failure. A losing day where you executed your plan, success. This mindset is rare, but it's what separates gamblers from professionals. 2. Learn to trade without needing to be right. Ego is subtle, but deadly in trading. It whispers, you have to win this one. You were right about this move. The result? You hold too long. You double down. You refuse to cut losses. But here's what consistent traders know. You don't need to be right. You need to trade well. Being wrong is just part of the game. Even the best traders in the world are wrong 40 to 50% of the time. What makes them great is how they manage being wrong. Let go of needing to be right and start focusing on executing right. 3. Develop a ritualized trading process. Consistency doesn't come from willpower, it comes from routine. Here's what my pre-trading ritual looks like. Wake up, move body, no phone, review overnight market events, macros news, meditate 10 minutes, journal emotional state, reread trading plan, visualize execution, open charts only after this is complete. That's not just discipline, that's design. Your brain needs repetition. If you want emotional stability in volatile markets, you must build emotional stability into your day. And rituals aren't rigid, they're protective. 4. Build identity-based discipline. Discipline becomes fragile when it's just a rule, but it becomes powerful when it's part of your identity. Ask yourself, what kind of trader am I becoming? Don't just say, I want to be consistent. Say, sure, I am a trader who follows my plan no matter what. I am a trader who values execution over excitement. This small shift changes everything. Because now breaking a rule isn't just a bad trade, it's breaking character. And humans protect identity more than rules, so build your identity around professionalism. Let your strategy become part of your story. 5. Track progress by habits. If the only thing you measure is your profits, you'll always be emotionally attached to short-term results. Instead, track how many trades you followed with perfect execution, how many impulsive entries you avoided, how many days you journaled your mindset, how often you respected your max loss or max gain rule. That's what builds consistency. Because in trading, the inputs create the outputs, not the other way around. 6. Talk to yourself like a coach, not a critic. Your inner voice matters. If after a loss you say, I'm such an idiot, I knew this was stupid, you're reinforcing shame, not growth. But if you say, that wasn't my best decision, let's learn and adjust, you're building a resilient mind. Every trader hits drawdowns. The question is, do you spiral or do you self-correct? Talk to yourself like a mentor would, because trading is 90% mental endurance. 7. Learn to be bored and trade anyway. You know what real consistency feels like? Sometimes it feels boring. It's waiting for the right setup while nothing happens for hours. It's logging a trade journal for the 10th day in a row. It's passing on a trade that looks good, but doesn't meet your criteria. And that boredom, that's where professionals thrive. Because they know boring equals stable, stable equals scalable. If you crave excitement, go to Vegas. If you crave mastery, embrace the boring repetition of doing the right thing every day. In summary, you won't become consistent in 1 week, but every decision you make, every rule you follow, every emotion you manage builds momentum. You're not just trading charts, you're training your mind. And the trader who wins in the long run isn't the smartest, the fastest, or the flashiest. It's the one who learns to trade like a pro, even when no one's watching. Build that. Be that. Why consistency beats greed every time. Here's the final truth. Greed will always promise you more profit, more excitement, more now. But consistency, quiet, disciplined, sometimes boring, is what actually builds long-term success. The traders who survive and thrive aren't the ones who chase every move. They're the ones who know when not to trade, who stick to their process even when it feels slow, who take small wins, controlled losses, and never let ego drive execution. Because in the end, it's not the big win that changes your life. It's the ability to protect it, repeat it, and outlast the noise. So next time you feel the urge to push harder, go bigger, Ignore your plan, pause, breathe, and ask yourself, am I chasing a feeling or following my edge? Choose consistency every time. And you won't just trade better, you'll trade longer.